This is Back Roads of Illinois server to farmers and ranchers in central Illinois in the Midwest. This is Back Roads of Illinois server to farmers and ranchers in central Illinois in the Midwest. We're glad you're here on today for our program. I'm Cesar Delgado for today. I will be visiting to Kenan Layden from agmarkets.net. This week is having some cover of soybean futures about China and the Wasde report from this week in South America. This is Back Roads of Illinois. This morning was the World Supply and Demand, or WASD. From the Department of Agriculture, we were talking about it with Kenan Layden from agmarkets.net. Kegan, how are things in North Dakota, and what is your thoughts on the demand report?
Well,
Things are good in North Dakota. We've had snow over the weekend. We're supposed to get some more coming our way here later this week. As far as the WASDE um, supply and demand report that's going to be released tomorrow, analyst expectations are pretty mild for little to no change on the report. They have corn ending stocks decreasing slightly. Um, Soybeans, maybe raising slightly, wheat decreasing slightly on the ending stocks, but historically, the December report hasn't really held too many surprises. Maybe this year it does, since we didn't get an October report, but everyone really looks to that annual crop report in January for big changes, that end of the year report.
Excuse me for my bad. The report is coming for tomorrow morning. Again, I apologize for misled. Let's discuss about the corn demand for export, our partners for this afternoon. We were talking about the world supply and demand report from the Department of Agriculture. How much should we meet at the moment of the export of corn?
You know, analyst expectations on corn is that it's going to decrease slightly from the last WASDE report. So um, that means that people are likely seeing that exports make maybe the USDA increases them further past what they already have done, or some other demand factors increase. Probably not looking for a lot of large yield changes. Maybe they're the yield decrease and they leave the demand unchanged, but um, no NAS report here. So I think that this will be, you know, maybe they're looking for some demand thing being modified, at least in the United States. They still have it over 2 billion bushel carryout, the analyst expectations. World corn is supposed to also decrease from 281 million tons to 280 million tons. So somewhere around there. So maybe seeing some decrease in corn stocks. So there might be some more demand. Export pace has been really good, Caesar.
What is the export numbers for this morning?
Corn came in above expectations on the weekly sales. Wheat was in above expectations. So those were probably the two big highlights, showing some really good export sales there. Corn continues to run ahead of pace, and so does wheat. And soybeans continue to kind of be lagging with the lack of China business, even though China has come into the market. There's a lot of catch up to do there. Since they didn't buy beans all year previous to what has been occurring as of late.
Of course. How is your thoughts with today's yield trends for this year with these prices? We talked about it with the August report before the government shutdown. Could you recap of it for our audience?
Yeah, so the general expectation is yield is really high. They
No.
came out in August with a huge number, 188, and they added 1 million acres. And corn closed higher on the week that week after selling off on the report. So the market maybe wasn't really buying that number from the USDA. They have since, slightly decreased that yield in the subsequent reports. A lot of people are looking for them to continue to decrease yield on that January report. How much though is up for debate, but corn is one where people are really looking at that yield number saying, man, that was high. Soybean question, yield may not have been questioned as much, but we're still looking for maybe some downward adjustments in January for that number.
Everyone has their respective of it. It was pretty crazy. What is your position on this Kegan?
Oh, that's a good question, Caesar. What's my position? I guess the USDA, if you remember last January, they threw a curveball at everyone and had a huge yield decrease on the January report after not doing anything in the months preceding that report, which really sent that market into a winter rally, peaking in that February time frame. Um, and that was good for people who are holding on to corn. It really upsets, understandably, you know, certain people who were trading the numbers they had before, not even showing a hint of, decreasing that yield, throwing them that curveball. So, I guess the USDA's numbers, the market, my opinion on the yield is the USDA will give you a number, and then the market, as we saw in August, will trade their feelings on that. So, um, my guess, I guess I would look more to trade whatever the USDA number puts out and see how the market reacts to it before I make any decisions. I do think the yield will come down some. Um, the market seems like it's not necessarily buying that 186 and some change that the um, last reports had. So I think the corn number comes down a bit, but how much is a good question. I'll just be looking for what the USDA gives us and how the market reacts to it.
How about the technical aspects on the corn markets, especially with these reports really quick?
Yeah, technically on corn, I'll touch on beans a little bit too, but corn has been in, kind of consolidating here since October, late October. It's tested its 200-day moving average a couple times. It broke through it there in November. It slightly broke through it here recently, but it really hasn't gained much steam past that 450 number and that 200-day. It's been very stout resistant. So that'd be something I'm definitely watching on the corn market. There's a good uptrend underneath the market coming from the August lows to the October lows, striking into the November lows, and the market has held that uptrend. So this consolidation that we're in, it'll be interesting to see what we get on this Wasde report and that January report, and as far as fundamental news to see if corn can get a direction. As far as soybeans, we had that great November rally on the hopes of China coming into the market. We gapped up in October, and there's still that gap on the chart. Soybeans maybe have a head and shoulders top pattern. The November monthly low was at 1090. We closed at 1093 on front month in the January gains today. So holding that 1090 will likely be important, especially with the Wasde out tomorrow. So the direction we see tomorrow from the report, how the market trades, it should be important. A lot of people with that head and shoulders pattern are, you know, anticipating that without something supportive, the market is going to trade down and fill that gap from October. Leading to some, lower prices here below that, $11 mark. Yep. Yeah. And I would be watching that 1090 level on soybeans. Technically, we should also get some support at that 1080 to 1087. Those are where some of the highs were scored. So they should be good support here if beans decide to continue their downward movement. But just some points I'm currently watching on the technical charts.
The cattle markets is characterized by the highest prices above 200 for this year. Could we start with our discussion on losing the fundamentals from the cattle markets with these prices?
Yeah, we could talk about some cattle fundamentals. Um, cattle have, fundamentally been very tight supplied, and there's nothing necessarily changing about that. Cash prices for cattle have really been a driver all year in this market. Anytime the board tries to sell off, it hasn't really been able to break the cash, and some of that is just because of the tight cattle numbers within the U.S. And U.S. beef has done a good job of making a premium product, which doesn't have a ton of substitutes worldwide. It's a high quality product and it's homegrown. So, the cattle market did sell off and have a pretty lofty correction from October through November. But since we scored the November lows, we've had some really good price action increase in prices. So, again, cash is fundamentally supporting this market, and it's something that can continue to drive this market.
How is the fundamentals on the feeders today with the winter weather?
Yeah, some of this really cold temperatures, if we get this winter vortex, are really going to hurt some of those um, average daily gains on cattle. You know, um, I would be looking more at just the supply and demand factors on the cattle. The winter weather will hurt some gains and maybe slow up some of the movement here within the cattle industry. Maybe aren't even constraining some of it more. But so yeah, always something to think about on the production side.
Do you have some final thoughts about the year's grains markets for this year?
Yeah, I guess some of my thoughts are, you know, when you're looking at marketing, you know, the soybean rally was fast and furious, and it may not be over, but selling into rallies is always something that is advisable, especially if you're at profitable levels. And I know not everyone is, but um, selling over $11 beans was almost not a thought prior to all this Chinese trade agreements and talks with Trump and Xi. So when the market gives you something, it's something to take a serious consideration of. Does this keep my farm profitable? Should I be looking at hedging some of next year's crop on this rally? So something to always think of when we get rallies, when sometimes the fundamentals and technicals are at odds. So um, just some last thoughts for you, Caesar.
How about the technicals and fundamentals?
Yeah, so we kind of already discussed some of the technicals and fundamentals, and in corn and cattle. Maybe we haven't discussed some of the cattle technicals. There is a gap on the charts on some of the daily charts, and we're really flirting with that right now. So there's a gap left, later October on the chart, and we're bumped up against that on a lot of the contracts in the feeder cattle. So if cash stays strong, Brazil tariff, imports may resume, since some of the tax has been removed on that. It's not a huge number, but it looks like the Mexican border will remain closed with screw so close to the border, and that's really helped support this market. So, filling that gap would be a good step, to for the cattle market continuing to march forward.
Thanks, Tyler. Thanks, Tyler. I enjoyed our conversation for today. You have a good Christmas and New Year. Let's go the Bears.
Thanks, Caesar.
This is Kenan Layden from agmarkets.net. I am Caesar Delgado on back roads of Illinois. You have a good day.